Apple closed down by nearly 5%, falling back into bear market territory. The FANGs have now shed as much as $1 trillion of market cap since the recent high. Joining me now from Zurich is Serge Berger from thesteadytrader.com to provide us with some technical analysis on the sector. Serge, thanks for joining us. Now, it's been a very rocky week for the US stock market, and you've been looking at the US tech sector. Do you think it's starting to look attractively valued, or is there further downside to come?
Hi, Victoria. Thanks for having me on. Yeah, look, I think this just continues to be a story that really has been in development for, let's say, a couple of quarters now, where the rate of change in terms of growth for these companies is just not sustainable. These are not bad companies. They're the larger names we all know out there, but it's just that at the end of the day, we're getting to a point where growth is kind of peaking out, at least for the time being. What I want to say here before we look at these charts just real quick, you have to understand how this is being looked at through the lens of an allocation from a sector perspective. So the S&P 500 has 11 sectors, one of the largest sectors being technology. Now, technology at some point a few months ago made up almost 27% of the entire S&P 500. That's like almost a third, right, to round it up in a bad way. That has since kind of split, and they added another sector, so now the tech is only 20%, but these companies, the Facebooks, the Amazons that have been taken out of technology are still being looked at as tech stocks by most fund managers that I talk to. I certainly look at them. So when people sell these tech stocks, whether it's a Facebook or a Google, it's not just that they're selling one stock. They're selling them as baskets because they're looked at basically almost as an asset class. So what do I think in terms of right here, right now? I do think we can get a bit into year end, but I can tell you that I think this whole buying the dip mentality, it hasn't changed yet in these large cap tech stocks, but it probably has to change at some point real soon, because again, the upside is probably limited aside from bounces at the year end or something like that.
All right, so let's delve into one of those stocks, which is Apple. Very sharp declines in trade yesterday, down 5%. Concerns about its iPhones, chip makers, the trade tensions between the US and China. A lot of fundamentals going on, but what are you seeing in terms of the technical side?
Yeah, I mean, I think the fundamentals and the whole backdrop is very important, just as is the structural part of aspect of it that we just talked about through the lens of allocation from a sector level. But look, technically, we can draw lines and everyone can draw a line, but I think we are certainly getting to a point where things are looking somewhat more attractive. What I always say to people, though, is that, listen, price is the only arbiter, and unless you actually see price giving a sell exhaustion or a buy signal, another bullish reversal, it's not there, right? So if you're looking at it right now, we've got the stock trading around $177 or so in New York, and there's plenty of horizontal support. You can see from a momentum perspective, the MACD momentum oscillator at the bottom of the chart, very oversold, and that's nice to see, but again, it doesn't necessarily signal a buy signal because we have not yet seen seller exhaustion. We've not seen an actual buy, an up day of meaningful proportion, which would tell us that sellers have been exhausted. So it's getting better. Personally, I think if you are going to buy some, and I did in full disclosure buy some yesterday, very, very small size until we get better confirmation.
What about Amazon? Because if we look at the moves in the NASDAQ yesterday, the Amazon actually managed to outperform. It was one of the lesser losers within the tech sector. Obviously, it's a stock that many other stocks out there are very afraid of. It appears to be cannibalizing on all sorts of different industries. So what does the chart look like there?
Yeah, so Amazon is a consumer discretionary stock through the lens of a sector classification. But again, I think a lot of people still look at it as a tech stock, or at least through the lens of a growth name. Here too, I think there's plenty of support in the stock, but again, we have not seen an actual washout with follow-through buying. If you look at yesterday, which was the 20th of November, yes, we saw a bounce, but again, it's not like that real washout that we need to see, where we can see that sellers have literally exhausted themselves. It's a very weak type of bounce. I would wait for a clear, like a real, invisibly you can see these a lot of times on the very simple candlestick charts. I don't think we're there. At least we haven't seen any follow-through buying it. You need to see it sort of a 1 to 3 day sort of reversal, and we just haven't seen it yet.
And what about Nvidia? Because we've seen this stock take a real battering recently, but it has been on the bounce back, at least in yesterday's trade, after short seller Andrew Leff from Citron said it's now starting to look attractively valued. Yep. Do you agree?
Yeah, and I agree with Andrew. I think it's certainly getting more attractive. What you have to understand here too, there's a fundamental case, then there's a technical case, and then there's the structural case. And I'm telling you, a lot of people that are long these stocks are overweight long Nvidia in these whole baskets of what a lot of people have referred to as FANG or whatever those other names for it. What I will say is if you look at it to a long enough time horizon and you draw some very simple Fibonacci lines, and I'll just give you a very simple analysis here. There is a case to be made that we're starting to get to a more significant level here. This is purely technical, right? But I do think, this sort of almost 61.8% Fibonacci retracement going from, let's say, the lows in 2015 to the recent highs is getting more interesting. So yes, I think here too, but again, we haven't seen a real bullish reversal yet or a real seller exhaustion, at least certainly not on a weekly closing basis, and even on a daily closing basis, it's kind of a feeble bounce. Keep in mind we have Thanksgiving week this week, so a lot of U.S. investors are going to be out. They were out certainly tomorrow, Thursday, and Friday is a half-day trading. So we probably have to wait for next week to see more firmer bottoms in place, if and when.
Now let's switch focus a second to gold, because given all of this market volatility and uncertainty, you would have thought that gold, at least as a commodity, would catch a bid, but unfortunately it hasn't, and that's mainly because of the rise in the dollar. And I know one stock in gold that you've been looking at is Barrick Gold. So do you consider that to be a safe haven?
I mean, I think a safe haven might be a bit of a strong wording, but I do think there's a case to be made that we see relative strength versus other risk assets, and I think certainly looking into 2019, that's something I'm looking at. So if you look at something like Barrick Gold, but again, keep in mind the primary driver here for something like Barrick Gold, ticker symbol ABX, is going to be the actual gold price itself. So you can't really trade this with idiosyncratic risk. But if you look at this, again, just drawing some very simple lines to the technical on the charts here, you can see we're bumping up against plenty of resistance here, which I think ultimately this coiling below here is quite healthy, which could see a peak, a pierce back above there, and that would be quite constructive. You can draw, again, everyone can draw lines, but these are sort of the prettiest lines that I can come up with. You can see the red line there, that's your 200-day moving average. We're consolidating above there. If you want to get really technical and draw bull flags and those kind of pretty things, which are just consolidation patterns, yeah, it looks constructive. I don't want to buy it right here, but I think if a stock like this can get back above $13.50 or so, and it comes in conjunction with a better bid in gold, I think you have plenty of upside.
Serge, thank you so much for your time.
Thank you, Victoria.
That was Serge Berger from thesteadytrader.com. I'm Victoria Scholar. Thanks for watching IGTV, and we'll see you very soon.